Hi and welcome to the Market Alert for Thursday, the 13th of May 2021. So yesterday it was inflation that dominated the market activity and probably will continue to do so as well. US core consumer prices explode higher at fastest pace since 1981. That's not strictly true. Well, maybe as far as the acceleration is concerned, but certainly yesterday's figures are not anything that haven't been seen in the last 10 years. A 10% increase in the index for used cars and trucks was the largest contributor. It's a good job they haven't got lumber in that calculation, isn't it? Stocks puked as soaring inflation sparks hawkish moves in monetary markets. I tell you what, that'll be an interesting one if the Fed actually do increase interest rates. That's for sure, because that will really screw the stock market. Today's CPI erases the dovishness of the weak job print. And let's just have a look, because this is how it turned up yesterday. We can see that 130 CPI forecast at 0.2, supposed to have dropped from the previous 0.6, came out at 0.8. But like I say, we had this in 2013, so it may have increased at the fastest rate since 1981. But the 0.8, we can see here that we had this in 2013. We have exceeded it, granted, but again, it's not something to shout about, I wouldn't have thought, but there you go. It's So let's have a quick look at yesterday. We had the inflation figures out. It was forecast at 0.2. The previous was 0.6. So only really an increase of 0.2. But the market didn't like it. And as it says in the headline, it's the fastest increase or pace increase since 1981. But you can see in 2013 we were at this level. Then the next month it dropped off. Who knows? I think this is different, definitely different. And again, as the headline states, we can see that we've got a 10% increase in the index for used cars, and trucks was the largest contributor. And of course, we've got the massive increase in lumber prices, and also in copper prices. That was the other one. So yeah, interesting. Very interesting days. We'll see in more detail. This sent the Dow down 600 points, and we can see that the implied is moving higher. As I said yesterday, we'll need to get to around the 28 figure. Let me just move this over because it's just slightly off there. 28.29 for the implied, which brings us around to this area that we had before. So the market's got a lot more on the downside as far as the implied is indicating at the moment. We're actually not that one. I'll come back to that in just a moment. And that one, it must be here then. This one. There we go. Lucky dip this morning. So yeah, we can see there we've got red now on the implied volatility as well. So going back to the spoiler alerts, let's just have a look at this. US margins, debt has exploded. This is people buying stocks on margin. You can see it's the highest it's been there. And there's a few of these charts. Again, you can see this. And this is indicative of when we get to these highs that the market corrects, which you can see. So now we're in this situation. And this is the interesting one, because a bit more data and analysis on this one in the S&P. When the blue obviously is the margin debt. The market held up for 6 months before it corrected. The second time it got to the all-time highs in margin debt, or back to the highs, the market held up for 4.5 months, and now we're back in this situation as well, and we're starting to see this correction as well. I wish I'd been exposed to these charts earlier. They would have been great to have actually seen this as a tool, again, as predicting the current correction that we're seeing. But of course, we've got the inflation situation being thrown into the pot as well. So let's have a look at the market, see what happened yesterday. We'll start off with the Dow. We'll go to the daily first, and you can see that it was a lot of selling, and certainly monkey hammered down yesterday and actually going through the resistance or support, I should say, to the left. Currently through this, the market's still looking weak, but not as weak as the DAX is looking. As I just looked over my shoulder here on, so let's just have a quick look at this, see why it's falling out of bed at the moment. Let's just go to the 2-minute chart and have a look here. Yeah, it's already on the slide. I'm jumping around a bit here this morning. Like I say, it just caught my attention. I just saw this last bar on the periphery and thought, what's going on there? So definitely weakness around in the DAX. Again, you can see that we're through the 62% retracement. We've got the 78 and the 89. It's also playing catch up, I suspect, from the Dow for yesterday as well, where we've gone through the 89. The only thing I can draw on this chart to see where the next downside target is from here to here, and see if we've got the, there we go, that's great. Get rid of the 38, we're already through that, so that 89 is taken care of. We're at 50% retracement from the last move up. Through this we go to 62 and then to 78 and 89 as well, and then when the implied volatility has doubled in value, if we can find that chart, which I think is here. Nope. I'll find it in a minute. There we go. Yeah, once this doubles to around the 29 level, then we can expect to see the market find some sort of support. It'll be interesting to see if the Fed come in and support the market. Of course, you're going to get straight reversals off this, unless the selling really does overpower, which we're seeing at the moment is the case. Nothing's stopping the DAX at the moment on the overnight. It's still continuing to move lower. Let's just, again, I'm jumping the gun, but let's just have a look here and see where we are in relation to yesterday. We could see yesterday's low quite easily attacked, and if broken, down towards the S2. Conversely, if we get some support coming into the market, and this is an initial shakeout this morning, we could see prices head back to the high of yesterday as well. So again, an interesting picture that's emerging there. And I think what will determine this is what happens when the futures open later on. So yeah, we can see yesterday's low. We've got the 78% just below this, so an interesting level of support in this area. In the yield, still at 1.683, still in the 1.6 area, down a bit overnight. We've actually been back up to 170 then, according to this. So let's just have a look at a 5-day, probably because of the inflation figures yesterday. So yeah, we're off the 170 again. So interesting that the yields are picking up as well. News for today, let's have a look at this, see what we've got. The main event, 5 p.m, is Bailey speaking, as I mentioned in Monday's market alert, or Tuesdays, that we have a lot of central banker news from the UK, but a couple from Lagarde for this week. Other news, again, for those that have said for years that I was a conspiracy theorist, mainly not subscribers or viewers of the material, but family members, etc., who are saying you're a conspiracy theorist, there's no rigging of the silver market. Well, apparently the LBMA misleads silver market with false claims about record silver stocks. In a shocking retraction, the bullion bank-dominated London Bullion Market Association has announced that it has been overstating LBMA silver vault holdings by a massive 3,300 tonnes of silver. Not an inconsiderable sum, that. So again, more clarification and confirmation of what we've spoken of for years. Speaking of which, silver's been hammered as well yesterday, which is amazing, absolutely amazing. I'm going to show you this because we had the inflation figures, and as we know, precious metals are a hedge against inflation, and we managed to move up, and in the next 15 minutes they decided to monkey hammer it, and the stock market turned around and moved up on the open when the Dow cash opened, and then obviously before that as well managed to rally the market back up. In fact, let me just show you this as I'll show you in the Dow because it's always more exaggerated, but this is in the 5-minute chart. Doesn't look a lot when you've had a 600-point drop in the afternoon, but you can see when the news hit that the market dropped 150 points in a matter of minutes, and then recovered in the next, brought back. But the ideal opportunity to actually go in and slam the silver price, which again is no surprise, absolutely no surprise. And there it is, looked at a bit more closely in the 5-minute chart. So yeah, first of all they slam the price, bring it up, we get to 27.64, the previous day's high, and now they've done nothing but hammer it to the downside and continuing to do so. And you can see now we're going to break yesterday's low and we're going to get hammered to the downside, because now they have the ideal opportunity, and in particular as there'll be a flight to the dollar to try and support the market, and that will again put pressure on the downside for the precious metal. So I'm expecting this one to catch up with the hammering that it's managed to avoid over the last few weeks. So again, down to 89%. I wouldn't be at all surprised if it doesn't get down to this level. Particularly the first level is going to be the 20-bar moving average, but they're going to take full advantage of this. And if they don't, then it will be confirmation that they are trying to switch places, and there is a far greater demand. But this is a derivatives market, and all it requires is a few mouse clicks at the right time to actually slam the prices. Doesn't alter the physical price. The premium is massive on that, but this is how they play the game. They did this last year, as I've shown you before, and I'll show you again. In March of last year, they had the COVID opportunity, and this is what they did when they slammed the price down to, you can see there, $12, and then brought it back from there. So nothing would surprise me with these criminals or whatsoever, given the opportunity to make a couple of billion, as the stock market at the moment is in a bit of a corrective phase. So back to the DAX. So just had a bit of a bounce, which you can see there. Like I said earlier, we can expect this. Let's mark the market down, shake out the stops overnight, bring the market back. Alternatively, we'll bring it back before we can then sell for the next phase down. So there we go. That's your quick whistle-stop tour today of the markets and what's going on behind the scenes. And don't be surprised if they manage to bring the market back during today's session as well, because that is going to be the objective, and in particular when you've got so much margin debt. Because once people start having losing positions and they have to liquidate, then that really starts to accelerate the downside. So fingers crossed, if you are a holder of stocks, that people don't get margin calls, because if they do, you will see what we saw in 2002 and in 2008 and in 2021, if that is the case, that they can't hold those positions. And a quick look at yesterday. I'm just going to do a quick review on this. Again, I wasn't at the desk long yesterday. Let's have a look yesterday. A bit of a wild start, as we can see. The futures market moving the market up quite nicely there, and then there was a battle when we kicked off, losing trade to start with. Then we went down, hit the scalp at the previous day's close. Like I say, they'll try and bring the market back as much as they can. And they did. They managed to move the market up around 80 points there. Before then, we saw some weakness with two other sell signals. The weakness came in. We had a nice retracement back there of 89% as well, before the market then switched to the downside. Through the morning, market managed to rally back once more. And then we had the inflation news there. Again, we've already looked at this in the Dow, so you can see how quickly this shot down and then shot back. And then when we opened in the afternoon, the market rallying. No surprise. Absolutely no surprise, because again, as I said before, they want the market on the highs if they can. They'll do whatever they can to try and bring the market back. as we can be seen by the next two buy signals as well, the market coming back. But we ran into resistance at this level, which you can see here and here. Also retracement there of 78%. This a double top, and then the market reversing as the Dow went on the skids and continued to move lower, as did the DAX. And then, as we've already seen overnight, the market stable at the DP level, and then falling out of bed and down to the moment to the 15,050 area, where it's currently found some support in this climatic volume that you can see here. Okay, that will do it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.